Well, welcome again to this series of analysis. And today I'm more interested in looking at the data that we find in this particular website. The website is Kaggle, and the data set that we are interested in today is that of Finance and Economics Dataset, the year 2000 to present. Now, about the dataset, as we are yet to find out when we'll be interacting with our virtual machine, we'll be able to identify the features of the dataset. But here is a brief that we find on the website. More we are yet to find out after we start interacting with the data in our virtual machine. But this is what we have as the brief analysis, as the brief preview or about dataset as on the website. The Finance and Economic Dataset provides daily financial and macroeconomic data, including stock, market prices, GDP growth, inflation, interest rates, consumer spending, exchange rates, and more. It is designed for use in financial market analysis, to track stock index movements and trading volumes, and under macroeconomic research, because this particular response that I'm giving, it's in response to the exercise that we had in our Python for Finance and Economics class. So this will also serve as a response or suggested solutions to the exercise that we looked at in that particular class. So investment decision making, that is to evaluate interest rates, corporate profits, and consumer confidence, machine learning and predictive analytics. So it can be used to develop forecasting models for economic indicators. So it's a valuable data set for economists, investors, data scientists, researchers, and policymakers. So straight away, what I want to do is to look at the data set. So this is what it has. We are told that the file size is 300 KB. It's about 3,000 rows. And we see that now 3,000 rows, that's a relatively big data set. And if you look at this, so let's look at our own analysis. Let's interact with the data as it is. And so the first thing we are going to do is to click download, and then here we find the link to the data set. So this gives us the path. It specifies the path to the data set, the current as updated. So I copy that and bring it to my notebook as such. So that has allowed me to so I run this. So by running that, that's what I see. It now specifies the path to dataset file, and we see that this is the path as specified. So the next thing that then I need to do once that is done is then before I interact with the data, there are basic libraries that I need to bring on board, and one of them is pandas. So I will say import pandas. I'll import pandas as PD, and then I should also import OS. Now all this I'm doing as I try to specify to actually call the data to a data frame that I'm about to specify. Sorry. So next thing I'll do, I will say dataset. dataset path. So I define that as dataset path, and I say, so I'll give it that, and then immediately do that. So once I do that, then I'm able then to specify the path where that data is found. So what I'll do, okay, I'll close it as such. I should close it, right? And then I bring all this. I'll bring all that as such inside here, like that. Then once I do that, then I will now, and now I want to provide a prompt that gives me an output as I've said. So I want it to list files in that folder to confirm the exact name. So what I'm going to do is ask it to print, and I'll be saying os dot this. Now this is a way of I'm referring to the directory, so that, and in this case I'm specifically referring to the dataset path as such. So with that, let me see what I get. It specifies then the name of the file. As we can see, it is Finance Economics Dataset. And now, having seen that, it then allows me to rename this notebook. So I'll just pick this part. So I want to rename this notebook so that we don't work with untitled. So I say rename, and there we go. So I've renamed, so that's the name. And now the next thing, having seen that is successful, the next thing that then I need to do is I would then want to load this into the data frame. Now I've defined the dataset path as from Kaggle website, as we saw here. Yeah. So I have it, and this second cell here was to actually get a list, actually to see the name of the file in that particular directory, and we see this is what it is. So our next step now is to load this into the data frame. More specifically, to change your actual file name, we will actually have to change. We want to move to the next step where we now specify the actual file name so that we can load the data into the data frame. So next thing that I'm going to do, I will say file path is equal to os.path.join. So now I'm actually instructing it to treat them as one. That is dataset path, and then the next one is the name of the file. So the name of the file here being, I'll pick just what we have here as it is and bring it here. Yes. Now, once I do that, then probably that's what I've done. But then I need to define the data frame before I click run. Data frame now I'm saying is given by pandas dot. I'm now asking it to read the CSV file. That is the type of our file as seen here. It's a CSV file. So, and read it where? File path, the one we defined here. Here. Read it where? File path. File path. I still don't want to use the shortcuts, but I will in future for this purpose. Let's just go step by step so that you master the steps as were required. But now I'm not saying that the specific codes that I'm giving are the ones that will give you the right thing. I know different data analysts, different programmers have different ways of crafting their codes. But now, the way I'm giving it is the basic way that it should be. Should you have any other way, any other wizard way, that will now depend on the level of understanding or level of experience that one has. So this is most basic for my students, and that's why I'm going step by step. So that being achieved, I want to move to the next part. The next step now, let me run it and see what happens. So I did that, and nothing happened. Of course, I see that there's no error that came, but probably the reason why that happened is because I've already defined the data frame. So I may want to test and see if indeed I captured the data in the data frame. So I'll be doing df dot head. Okay, if I do it like that, let me do the first 10 dot head, first 10, and we see. Now you see the data came, the data was loaded, and this is what we see. And this are an overview of the data set that we are dealing with here. This is an overview of the data set that we are dealing with. And so we see that now these are rows. The first row we see is Dow Jones. We have S&P, Dow Jones, etc. That's how it goes. We have NASDAQ, and it goes as such. Remember, it goes from 0 up to 2,999 because there are 3,000. There are 3,000 rows. The first row of 0 being treated as the first entry in the data set. So this is what we have. But probably if that's what we have, let's try to see, say, the columns, the number of columns that we have, or probably the features, overview of the features of the data set. So I'll be doing df in 4, and I run. Once I do, this is what I see. I'll clearly see that the range of the data set is from 3,000 entries to, that is from 0 to 2,999. And I can also see that date, we have date as the first entry, stock index, open price, close price, daily high, daily low, trading volume, GDP growth percentage, inflation rate percentage, unemployment rate percentage, interest rate percentage, consumer confidence index, government debt in US dollars, corporate profits in US dollars, forex, US dollars vis-a-vis euros, forex US dollars vis-a-vis Japanese yen, then crude oil price US dollars per barrel, gold price USD per ounce, real estate index, retail sales in USD, bankruptcy rate, mergers and acquisition deals, venture capital funding, consumer spending. Now, you see this, why this data set is so rich in terms of learning purposes, in terms of having to deliver the content in our Data Analytics Academy sessions. Now, for this particular class, you realize that the kind of data set that we have mined online, the data that we have picked as it is, and this demonstrates data integrity, and it's the most recommended professional way of handling data, where we collect data directly from the site, as we have done now. The data that we are seeing here is live from Kaggle website, and we are using it live as it is. There is no manipulation whatsoever along the way, and this is the recommended professional practice of handling data. And so we are using this for the purposes of demonstration of the concepts that we learn in our Python for Finance and Economics class course in our Datalytics Academy. So I'll proceed. That's what we have so far. And we have seen that's the match we have gone. So now the last part here will make sense, because now when we are dealing with, say, stock index and the entry, okay, say open price, and the entry, instead of being entered as integer, as int, like this one here, it's entered as float. That means that the entries could be having commas. So like saying 1,000, instead of having 1000, you have 1,00. So those are cleaning aspects that may need to be performed. So next, I want to identify, because in my analysis, I know there are specific columns that may need particular attention in terms of their sensitivity to outliers, presence of outliers, or outliers, or more specifically, let me talk about outliers and perhaps entries that were missing, but the data collector felt it wise, instead of putting a dash, they felt it wise to put a 0. Now we capture 0 as a number. So what I'll do next is to try to identify specific columns. One is close price column. The second will be GDP growth percentage column. The next will be inflation rate column. So I want to select those ones, those ones, sorry, and apply what I refer to as removal of what I refer to as selective removal of outliers, because in trying to model the time series of such data, they are bound to give misleading results if outliers are not identified and well handled as they should be. So my next step will be identify those columns that will be of my interest now, and I'll perform data cleaning. So very fast, what I'll do is I'll define, first I want to define, I'll call them columns to clean, columns to clean. So these columns to clean, I'll have to define them as this. Sorry. Okay. So I'll have to define them as first, we are referring to close price. Where is close price? Close price is somewhere. Close price is here. I pick that and bring it here. So it's close price. Then the next is GDP growth percentage. It's here. I pick it as such, then I bring it here. Then I bring it there. Now the next is inflation rate percentage, which is this one here. Inflation rate percentage, which is that one. So this is exactly what I expected in that particular exercise. And yeah, so having done that, so I've first defined columns, a new name called columns to clean. And I've specified that the columns of interest are close price, GDP growth percentage, inflation rate. So I want to do a loop and say for columns in for columns, in columns to clean, columns to clean. For columns in columns to clean, what I'm saying is, one, I need to define what I refer to as first quartile. Now, first quartile, when you draw the distribution, the picture of the distribution, probably when our understanding is that of a standard normal distribution, then we are expecting one that has got much of the data lying around the median, which is the middle quartile, and some data lying on the right and some on the left, and probably they are tails. So I want to consider quartile 1. I call it quartile 1 is equal to, now I'm defining quartile 1 is equal to data frame and, no, it's not that, it's this. And I'm trying to get the right name that we used so that we don't get lost. So for columns, so I'll say for columns, dot quantile. So first quartile is equivalent to 0.25, so I'll be having 0.25 as such. So that's the first quartile. Then probably I consider what the second quartile should look like, and I will be saying it's still the data frame as such, and again I'm saying columns. I hope I didn't make a mistake in the spelling, because that would make it not work. So I guess that's right. So quantile, now I'm referring to, okay, quantile, I'm now referring to the upper quartile, and that corresponds to 0.75. That corresponds to 0.75. So in essence, what I'm trying to do is try to ignore data that fall on the left tail towards the left of the lower quartile, and those that fall towards the right of the upper quartile, so that we maintain the middle, because if we take 0.25 the other end, that's about, we take off about 0.5. Yes. So next, what I'll do is I want to talk about now interquartile range. So interquartile range, we know that is given by the upper quartile. It's the upper quartile minus, that is the interquartile range, minus, actually it is the upper quartile, because otherwise it would be negative. It is the upper quartile minus the lower quartile. That's what gives us interquartile range. But then we need to define lower in terms of, okay, having to define what interquartile range, we need to use that figure to define what our lower boundary or our lower value is supposed to be, or our upper value is supposed to be. So next, what I will do is define lower. I'll define lower, and I say lower should then now be given by lower quartile minus 1.5 times 1.5 times 1.5 times interquartile range times interquartile range times interquartile range, and then the upper should be just that. So I'll say upper, and Upper is just this. Okay, let me just write it because now it's Q3, that is the upper quartile, plus the upper quartile plus 1.5 times 1.5 times IQR, that is the inter-quartile range as such. So having all that, the next thing should then be, I now want to define the data frame, and so that it takes care of, I want to define the data frame so that in those particular columns, it automatically picks those values that are within the range that we are specified. And so the next thing that I'll do is say df, that's the data frame. I'm now instructing it that the data frame is that data frame where it's that data frame where we have a data frame of columns as we had specified columns as we had specified, being greater than columns as we had specified being greater than lower just a minute, something I've already moved out of something. So what is columns, yeah? So it's this, greater than lower, and we're also saying that data frame right here, columns as we had before, data frame columns now is expected to be less than or equal to, it's expected to be less than or equal to the upper. So this has the effect of implementing our criteria that we have here. The criteria that we have specified here, this now has the effect of implementing that particular criteria. So that if I now run this, oh sorry, there is a mistake. Let's see where the mistake is. It's saying IQR is equals to Q3 minus Q1. So there's a problem there. So probably there's a problem, and the problem is with we'll see. Let me just see where the problem is. So Q3 plus IQR is Q3 minus Q1. Lower is Q1 minus 1.5 dot QR. So where's the problem? Name Q3 is not defined. Good, I now see. Q3, I should have defined it here, but I said it's Q2, which is actually the median, the middle quartile. So we change that to Q3 so that it's properly defined. Good. It's now defined and we get around that. So we move to the next thing. Now I want to see the shape. Let me just see df. I'm just trying to do df dot shape so that I see how my data looks like. At the time I know that we had 3,000. we had 3,000 rows. Let's see if we are sticking to that. And looks like, yes, we have stuck to the 3,000 rows, and we still have 24 columns as such. So that is what we have upon removing the outliers. So the next thing, again, now that we may be interested to look at is now this particular data set, we may need to convert it to date time. That allows us to work with the time series analysis. And as we do that, then before then, I may want to check the number of columns that have missing values. So that's just a preliminary check, to ensure that to check the sanity of the data. So let's see. I just want to run this before I proceed. Print df dot is null, and then give me the sum. So by doing this, I'm simply asking for a printout of the number of entries with missing values. So let me do that, and I should see that all the columns don't have missing values. And again, that is already an indicator that the data we are dealing with is likely to be synthetic data. So that is that. So that has helped us to check that. So probably what then I need to do is to, having seen that, I don't need that anymore. And I will do df, I want to convert to date time. So what I'll do is say df is equal to pandas dot read. You read the CSV because our file is in CSV form, and the file path as we have defined it, file path as such. Then, having done that, I'm most particular in this particular column. This is the column that I want to change. So I say df date. So I bring this, it's date, take it, bring it here, bring it there as such. Okay, once I do, so I'm saying use pandas to convert this to date time, date time. Now, this allows us to perform time series analysis in a sequential order, in an order that is consistent with the manner with which the data was received or with which the data came in. So it is the date time column that is the date column that we are interested in. So still what I do there is paste, and I have that. Then what is my next step? My next step is now to set the index to be date. So the column date will now be the index of my data. So I'll do that by saying df dot set. Now you set the set index for the data frame, set date as the index. So this is what I'm this is what I'm implementing. So in that case, to set date as the index, I'll be having date, it's still date, there's date there. Then now to achieve that now I say in place is equal to true, which is Boolean. True, which is Boolean. So that is that. So I've effected that so that the date column, having converted it to date time, that is now what will be set as the index of the data frame. Once that's achieved, just to check if our code is right up to that point, we see that it's right. So I can continue because there's no error list. I can continue. And now, next thing now is add imported pandas as PD, but now because I need to start doing visualization, there is need to import NumPy as NP as well, so that we are able to use graphics from Matplotlib effectively. Because my next assignment is likely to look at stock index trend over time. So in order to achieve this, to look at stock index trend over time, to achieve this, then no, I don't need this now. So DF shape, I don't need that. Okay, this I may keep for now. So what do I want? I want to do a figure of stock index trend over time. But before then, I should remember that I should have imported NumPy. As NP. So I'll say import NumPy as NP. That's now very well captured. So NumPy as NP, and probably just below it, not to waste any other cell, I should say import Matplotlib, matplotlib dot pyplot as PLT. So whenever we call PLT, we are indeed referring to matplotlib dot pyplot as PLT. So let me just run that. Good. We are good up to there. So what do I want to do? And I want to do a figure. And this figure is stock index trend over time. So I'll call PLT dot figure, and this figure, the desired size is fig size is equal to 12.5. That's the dimension of the figure that I want created. I'll again call PLT and then say plot. Now you are plotting it from which data set? I'm now specifying it's the data frame, and for that data frame we are interested in the following column. Called close price. So I bring that close price here and serve close price. Then I put a comma because that's not all that I want achieved with that line. And then say label it. Just a minute. Label it stock index close price. Let's say stock index close price, stock index close price, stock index close price as such, stock index close price as such. Then we want to give it the title. We want to give it the title. We want to give our diagram a title. So I'll say PLT dot title dot title. And what's the title? What's the preferred title? What's the preferred title? The preferred title is stock. Preferred title is stock index trend, stock index trend over time, stock index trend over time as such. Now, that should be the title of my graph. That should be the title of my graph. And next, optionally, let's provide the legend. It helps us identify with the diagram, and probably I'm asking that it's shown. So I want to show my figure once drawn. So I do that, and this is what we see. This is what we see. So this is the first curve that we are having, and you can see that we we have data that spans from the year 2000 to the year 2008, and that's the data that we have. So okay, that's the graph that we have so far. And next, what I want to delve in is to actually look at the data to see if the data set is actually representative of what we expect to see, in reality. But then quickly, what we can see from the data set is that stock index trend over time has got a lot of unpredictable spikes, as you can see, and they are wild as such. But as wild as they are around the value of 1,000 and 5,000. So that's where prices fluctuate the most. Now, this is quite volatile, because if we are to look at, let's see, I want us to look at, so because we looked at its close price, I want us to look at the market behavior is such that the average level is around 3,000. That's what we can see. That's around 2,982 for open, and the range is between 1,000 and 5,000. But then I wanted to check, but I know upon checking, the standard deviation runs around 1,150. So that again is quite volatile. The median and quartiles, we see that the 25% quartile is roughly at 2,000. The middle quartile is roughly at 3,000, and 75 quartile is roughly at 4,000. So so the market traders mostly the market trades mostly between 2,000 and 4,000, with big swings up and down. The high standard deviation tells us price volatility is significant, and the trading volume is a mean of about 500 billion, and with a range of about 1 billion, which is a very wide spread. So volume ranges from very quiet days to extremely active days, likely around news and similar events. Let me do a little of describe. So I would say DF dot describe, df dot describe as such. And let's see what we get. So if we describe, this is what we see. So close price here, we see a standard deviation of about 1,151, as I was saying. That's the standard deviation that we're getting, and that's quite volatile, and it's with a mean of about 2982.249. And the range as we have seen is between 1,000 and 5,000, as seen from here. The lowest being 1,000, the highest being 5,000. So that is that. Let's now look at the next thing that we may, before I stop. The next part of the question, so next required you to compare key macroeconomic indicators. You are required to compare key macroeconomic indicators, and these key macroeconomic indicators are found in the columns of GDP growth, inflation rate, and unemployment rate. So let's do that quickly before we stop. We take a break as we intend to continue again in a short while. So let's achieve that fast enough. So having seen that, having seen this, we may come back to it anytime we call this. So I will say DF, so it's GDP growth. Actually, I should pick it from here. Because this is what it is here. That's what it is. So GDP growth in percentage, and I also have inflation rate. Yes, inflation rate is here. I also have inflation rate. I bring inflation rate there. And I also have what? Unemployment rate. So I get that unemployment rate. Where is it? Where is unemployment rate? Here, unemployment rate is here. So I pick unemployment rate and bring it right here, bring it right there. That's unemployment rate. Then I want to plot. Those three should give me a plot. So I say plot. I instruct is to plot a figure. Plot a figure that is fig size. A figure of size 12 and 6 in dimensions as such. 12, 5 and 6 in dimensions, and I need to give it a title. So I say PLT title, what do we call it? Let's call it macroeconomic indicators over time. So macroeconomic indicators over time, like that. Macroeconomic indicators over time. So next thing is to show. So I'll say PLT dot show, because I want to see the figure. So I say that and run to see if there is no mistake. There probably is a mistake somewhere which I need to correct before we proceed. And so where is the mistake? Unemployment rates, not in index. Where is unemployment rate? Unemployment rate. Search. Try this. Good. So it's worked. That's what it is. So here I have an output of macroeconomic indicators over time. And looking at this particular story, then you notice that the GDP growth has a mean of about, because GDP is represented by the blue, by blue. So we see that it has a mean of about 2.61 if we are to look at it. So from the analysis, that's what it is. But the range, it ranges from a low of -5, as you can see, up to about positive of 10 once in a while. You can see traces of blue. So that's the range. And 25% makes about, actually, values that are -1.0% make up about 25%, and 75% are made up of values. Actually, the upper quartile, that is of 75%, makes up about 6.2. So the economy sometimes contracts strongly up to about -5%, and sometimes booms up to positive 10%. On average, it grows moderately around 2.6%. Then inflation rate, represented by the orange, has a mean of about 5.1 if you look at it, and range is between 0.01% to about 10%. So mostly a moderate inflation environment, but with occasional very low and very high episodes. Very low and very high episodes. And then unemployment rate, represented by green. So labor market, again here we see that labor market conditions range from very tight, that is 2% unemployment, to 2% unemployment, to seriously stressed 15%. So it goes all the way from here up to about here, up to about there. Then let's look at interest rate. Interest rate, did we capture that? No, we didn't. So that's what we have. So this is the data set as it is, and these are the kind of responses that I was expecting. But then preliminary analysis of the data set, and going by the in-depth analysis that I carried out before conducting this class, I can comfortably conclude that this data are synthetic data, because first you saw that upon cleaning the data, we still ended up with a number of rows we didn't quite eliminate. That means that the data did not have outliers. At the same time, upon checking for the missing entries, we noticed that there is none across the 24 columns. So that's synthetic data because it's close to perfect. Another reason why we conclude that it is synthetic is because of the spikes. These particular spikes are so wild. Well, we expect some level of unpredictability in the real world, but that unpredictability, what we refer to as the the variability, is expected to oscillate around a particular mean, around a particular point of stability or point of equilibrium. And we see that this data set is one where there's a point of stability, and yet outside that point of stability, we see a lot of wild variability. It can take up the worst or the best, pessimist or optimist. Well, up to there I want to stop, and I know I'll be getting another time so that I continue with the same approach. Next time I'll be looking at real data, data that speaks to the real world, so that when we are making such analysis, we make insights that correspond to the status of the global or specific economies. Up to there, stop, and thank you for being with me throughout this session. Thank you, and see you again